Back to our final session of the afternoon. At the end of this session, I'll be bringing you the result of our final poll. So it's open just for 30 more minutes. Are you bullish or bearish on open banking? The result looks like a sure thing, but there's still a bit of time. So please do vote while you can. Now, I definitely don't need to ask our next guest how he'd vote, because Zach Perret is the CEO of Plaid, the US open banking provider, which he co-founded in 2012 and was acquired by Visa earlier this year. And he joins us this morning, I think, all the way from San Francisco.
Yes, I am. Nice to be here. Thank you for having me.
No worries. How are you, Zach?
Doing well, doing very well. It's been a very busy few months, but you know we've been excited to see all of the progress that fintech has made over the past few months. Happy to jump in and talk about it a little bit more. But just to be really clear on the answer, we should be bullish on open banking and open finance more broadly.
I'm glad you say that. First of all, we've been asking all of our speakers the same question to start, which is, what is their advice for other entrepreneurs during these difficult times? What advice would you give to a fintech CEO right now?
So first and foremost, it's kind of talk to your constituents, spend a bunch of time hearing exactly what's going on in their world. I've spent more or less the past 2 months just listening to our customers, hearing what's going on, hearing what we can help with, hearing what we can't help with, and frankly, just empathizing and understanding. So hear from your constituents and hear what they need. There will be great opportunity created for fintech in the coming 2, 3, 6 months. And the best way to find that opportunity, the best way to find out how to help consumers survive this and get through this, how to help small businesses survive this and get through this, is to be talking to everyone all the time and constantly on the lookout for it. So that's my biggest advice. Second, I would say, we as an industry, fintech mostly, has been surprisingly efficient while working from home, while working remotely. I, at least for Plaid, I'm a proponent of a slow return to work, a slow return to the office. We continue to be able to get a lot done and serve our customers while remote. So I'd advocate for fintech as a whole to think about being slow in the return to the office, allowing the public transit to be something that more essential businesses perhaps are able to take advantage of.
It's the return to work has been one of those sort of hot topics in San Francisco and among Google and Twitter and those other sort of companies. What is your approach? You said slow return. Do you think we'll ever go back to normal?
I'm sure we'll go back to normal at some state. It is humans are surprisingly resilient, and I'm sure that we'll go back to normal or whatever new normal is. However, I expect that to be relatively similar. And I will say, for us as a business, we've been, as I said, surprisingly efficient in our ability to work from home. We were able to launch a new product specifically to help with small business lending in record time from home, which is great. We continue to do kind of ongoing product launches and so forth, and customer feedback has been quite positive. I do think in some sense, businesses that are efficient from home have a responsibility to not crowd our public spaces, not crowd our public transit systems, so on and so forth. And so from that standpoint, I'm actually a proponent of being slow and measured in our return. And I hope that other technology businesses that don't require in-office interactions will follow our lead there.
Now, open banking, as you've already spoken about, is a huge shift in financial services. I think the acquisition of your business earlier this year was a testament to that. But can you tell us a bit about your vision for this connected world of finance and how it's going to play out over the next few years?
Sure. Maybe just to caveat though, so Plaid has not closed the acquisition. We've announced that we've signed paperwork to be acquired. The acquisition will hopefully close by the end of the year. Lots of regulatory approvals and such to go through. So as we think about the importance of consumer financial data or financial data generally, it's not just about consumers, could be small businesses too. The importance of financial data to living a consumer's financial life is absolutely crucial. If you look back, say a decade ago, before we'd started Plaid, before fintech had become a thing, before we'd all kind of shifted all of our interactions to digital. In order to do almost anything in your financial life, you had to walk into a bank branch and talk to a banker. You had to bring paperwork with you, physical paperwork. In order to get a mortgage, you had to bring on average 80 pages of printed out paperwork in order to submit that. And it would take something like 8 to 12 weeks to actually get your mortgage submitted. So our financial system was built for a world that at the time, it didn't envision the internet. It was largely based on analog practices, so on and so forth. As you move to today, COVID and the lockdown and the quarantine, they all highlight the importance of being able to live our lives digitally across so many different things. It's kind of using video to talk to friends. It's kind of using Slack and so forth to conduct our business. And in our financial lives, you can't walk into a bank branch. Particularly here in the US, the majority of them were closed for months. And if you can't walk into a bank branch, how can you do the things that you need to do in your financial life? You still have bills. You're still getting paid. You still need to pay your loans, so on and so forth. And so digital financial services is crucial to that. But the reality is that we don't live in a world in which people just have one bank account and that bank serves them in all their needs. The average person has somewhere between 3 and 7 primary financial applications, meaning applications that they open on a weekly or a monthly basis. And then they have a long tail up to 30 or 50 other financial applications that they use even less frequently. It's impossible to imagine a world in which one bank provides every one of those applications. And truly, in order to have an interconnected financial life, you have to be able to see your data, check your balance, set up a payment, so on and so forth, from your bank account. And so we believe deeply in the importance of open banking and the importance of giving consumers access to their financial data. But more broadly, I'd say, as we look ahead, this concept of open banking is great. However, it's narrow. It's just focused on banking, as the name implies. And I think we're going to see a big shift towards open finance in the coming months and years, as we start to think about, well, it's not just about digitizing banking. It's about digitizing wealth management. It's about digitizing investing. It's about digitizing lending. So many of these other bits of financial services also need to be digital for consumers.
Just quickly for our audience, if you've got any questions for Zach, please make sure you drop them into the chat, and we will get to them at the end. Zach, you just touched on some points. One of my favorite Plaid announcements recently was your partnership with Microsoft. And I think I'm explaining this right, but it let people securely connect their financial data into an Excel spreadsheet, which is amazing. First of all, how did that come about? It's such a great sort of integration.
Oh man, I love this product. It was a really cool announcement. It's actually something that when we first started the company, we said, hey, we should build an integration directly into Microsoft Excel. And it's taken us something like 7 years to actually get it done. So the most commonly used budgeting tool in the world is Microsoft Excel. And people are kind of pulling their financial statements. They're looking at their savings. They're typing bunches of data into Excel, and they're building a model. And I myself, being a finance nerd, have always built models and projected spending and so forth in Excel. There have been a bunch of amazing products that came out to automate that. Ultimately, kind of building a budget in Excel requires a lot of manual work. You have things like Mint, you have personal financial management tools, like they're all over the place, and they're all really wonderful products and frankly simplify things a lot. But still, even today, we see the most commonly used budgeting tool is Excel. So in partnership with Microsoft, we were able to build a connection such that you can automatically kind of link your bank account to Excel, have the data pulled in such that you can build a budget, and then have the data updated in real time as you're spending over time. And so it's been really exciting to see that get set up. I've been playing a lot with our demo of it, and it's one of these things that you have the concept when you first start the company, say, yeah, that should just exist. Turns out other priorities and such, and we're fortunate to work with many amazing companies that have built great budgeting tools. But we are very happy to have come full circle here and now have this embedded in Excel. And I hope that you will all try it as the Microsoft kind of releases continue to roll out.
I look forward to. And at the same time as these cool releases, you guys have already also been on a sort of explosive global expansion. This side of the Atlantic, we've seen the UK, Spain, France, the Netherlands. You've been growing very quickly. On coronavirus, what impact will that have on your expansion plans for the next foreseeable future?
Well, I'll add we're also live in Ireland as well. So COVID has a major impact on the way that we think about digital adoption of financial services. And in fact, when you look at the fact that all the banks are closed and consumers are forced many times for the first time to interact with digital financial products, we've seen an acceleration of digital financial services that we could never have imagined. When I talk to the banks, I've talked to them frequently, and when I chat with the banks, they say something like, "Oh, we've taken our 3-year, we've taken our 2-year digital roadmap, and we're accelerating it into the next 6 months." When you look at many of the banks, in the early parts of the lockdown, they had crashes on their online banking portal. They had their servers were overloaded. They weren't able to serve people in the way they wanted to, especially as small businesses were applying for loans. They had too many loan applications. They had to do it all manually. So we're seeing a massive acceleration of digital roadmaps in financial services, which is exciting long term. It's very busy short term, and ultimately will serve consumers much better as we look ahead. And the way that we think about this applying to Plaid is actually it's just a reinvestment in the roadmap that we've already had. We've been really actively working with a number of our major customers to help them kind of accelerate features that people need while spending time at home and unable to go into a bank branch. In terms of our international expansion, we're continuing to the same set of priorities and same set of roadmaps. We've been so humbled to watch the European reaction from the fintech community. It's been wonderful to see the level of rallying that the fintechs have shown so far. And I suspect that over the coming few months, we're going to see some really amazing features, tools, new products and services coming out that will, fundamentally improve the way that consumers are able to interact with their money digitally.
I look forward to following it. Can you, as you're on the ground in the US, can you tell us a bit about what you've seen in the US fintech sector over the last few months? What the impact has looked like from coronavirus, whether it's on funding, hiring, the growth that's going on? What's sort of the immediate impact been?
It's a great question. So it is. We're fortunate as a business to have customers on all parts of financial services. Everything from the smallest of startups to the biggest of banks are building products on top of Plaid, and it's been extremely uneven in the reaction that we've seen and the impact on these businesses that we've seen. On one side, we have kind of investment products. So we have companies that are doing kind of stock investing or stock purchases. We have companies that are doing things like cryptocurrency purchases, particularly Bitcoin purchases. As prices had high volatility, and particularly as prices were rising after the crash, these platforms saw massive user adoption. Tons and tons of people signing up, tons and tons of people wanting to trade. Really close to that, we also have seen digital payments, particularly consumer digital payments. So things like PayPal, things like Square Cash, things like Venmo. The adoption of these has also been massive. The payment volumes has been massive. And people are now finding ways to send money to friends, either kind of paying back what they owe or helping people out. And there's been this great community formed around peer-to-peer payments, which has been really surprising. Other end of the spectrum, consumer unsecured lending. People are kind of the credit facilities, the banks themselves are pulling lines from a lot of the digital lenders. Business lending, outside of government-backed program, there is basically no market for anyone to want to buy digital loans given to small businesses. And the underwriting requirements are going through the roof. Mortgage lending also has slowed down significantly. It's starting to pick back up now, which is exciting to see. And so definitely kind of total differences on different sides of the market. What I will say overall is that from a digital financial services perspective, we're seeing a huge increase in app installs or initial signups for a lot of these products. For neobanking, for example, or banking generally, we're seeing a lot of people starting to interact with online banking. They're signing up for the first time. They're not necessarily transacting as much though. So increase in installs, increase in opens, not an increase in transactions as much because people frankly don't have the capital to be doing all that many transactions. A lot of fintechs make money off of card-linked spending, so they're making money off of interchange fees. Obviously, card-linked spending is way down. Card-not-present transactions, meaning payments being made oftentimes on the internet, buying digital goods. It's relatively neutral to slightly up, maybe 20, 30% increase. And so when you look at it on the whole, what we're seeing is there's probably a net decline in overall fintech revenue, as might make sense. But in terms of overall fintech adoption, usage, so on and so forth, because of all these new installs, because of all these new opens, because of all this needed reliance on it, I actually suspect we've now found a new normal where people that previously were never willing to engage with fintech, or were never thinking about engaging with fintech, or never had a reason to do so, are now getting that initial reason. They're downloading the app for the first time. They're signing up for the service for the first time. And so my hunch is, we fast forward 6 months, we've now reached a new plateau, or a new normal of the number of people that are willing to use digital financial products, and that will have massive benefits for years to come.
And my next question, and it leads on to that, as the revenues sort of decline, but actually the usage goes up. Do you anticipate off the back of this, we're going to see a wave of consolidation across the sector, whether it's acquisitions, M&A, over the coming months, as some of these platforms which are seeing huge success, but are struggling to monetize what they've got?
Yes and no. I would say, we might see some consolidations. We might see some mergers of companies that are struggling or willing to sell technology, or perhaps a wave of kind of like acqui-hires on the low end of the market. I don't suspect that we're going to see gigantic acquisitions outside of maybe one or two that were already in the hopper, already being discussed prior to the onset of coronavirus. I don't suspect that we're going to see gigantic acquisitions there. However, I do see, a fair amount of consolidation amongst the lower end, amongst the smaller companies. It's interesting to think back. If the global financial crisis of 2008, if that was the advent of fintech, really, it kind of paved the way. It created the consumer sentiment, and kind of the consumer sentiment plus timing equaled fintech. I still wonder. I still think about, what is this? What is coronavirus? What are we creating? And I think it's already proven to be a massive reinvestment in digital financial services. Yet we haven't yet seen the second order effects. We haven't yet seen the long-term impact. So I certainly could see some consolidation. What we are already seeing is a great deal of partnership. So where banks, for example, might not have a product that consumers are really demanding that they need, we're seeing banks look to fintech to say, hey, could you bring this product to me? Could you help me launch it? And maybe those partnerships, as you implied, maybe those are the first step towards some of these acquisitions.
You've touched on what my last question was actually going to be, which is the lasting impact of coronavirus. We asked our audience yesterday about bank branches. Will the bank branch be over by 2030? What do you think do you think the bank branch is over? And what do you think the lasting impact is going to be?
I don't think so. There's a great value in sitting down and talking to someone about your personal finances. And many people gain safety, they gain security from having that conversation in person with a human. At the higher ends of the market, especially as you think about kind of wealth management and people with large sums, they want the personal touch, they want the personal feeling. And so I don't think that the concept of an in-person relationship banker is ever going to go away. However, I do think that the vast majority of the interactions are going to shift digital. So maybe you walk in and you have a chat with someone, and they help you figure out how to build a budget, what kinds of things you want to invest in, so on and so forth. They're not going to then go type that data into their computer and actually do the work right there. No, they'll do it digitally. You'll do it digitally. You'll have all the tools at your fingertips to actually do those things. I think the concept of walking into a bank branch with 80 pages of documentation and saying, "Hi, please, can I have a mortgage?" That doesn't make much sense anymore. We can do that all from our phone. We can type it in before, but maybe we go in and have a chat with a mortgage maker and say, "Hey, how big of a mortgage should I get? Do I really have the ability to pay this?" Those kinds of kind of financial advice will be really helpful. That said, I could see a lot of that moving to video, to Zoom perhaps. But the concept of having a relationship banker is probably not going to go away for quite a long time. When we think about the lasting impact of this, as I just said, everything has to go digital. We're moving our kind of the physical concept of a branch, of the actions that we take in a branch, onto a fully digital methodology. More importantly than that, though, everything has to be interconnected. No longer can we live in a world in which my bank that I go to frequently does not talk to my wealth management service, does not talk to my lending service, does not talk to the student loans that I have or the bills that I have. It has to all talk to each other. Consumers are not willing to kind of stand for products not working well together anymore. And as we think about the importance of that, it's really about interconnectivity. It's really about leaning into technology. It's really about, as I discussed previously, coming to this concept of holistic open finance and allowing technology to actually live up to the promise that it's had for so long, allowing technology to actually have the impact on financial services that it's had on every other sector of our economy. And in some sense, I'm bummed that we haven't gotten there yet. However, I'm extremely hopeful that looking ahead 5 years or so, we're going to see the same impact of technology as we see in every other sector.
Fingers crossed. We've got a few minutes left, and I want to make sure I ask some of the questions from the audience. Paul Loberman has asked, will Plaid extend beyond connecting bank accounts into more financial services? You touched on open finance earlier, and also into non-financial data, open data.
So it's a great question. I'll touch on a little bit of what we're doing in the US, and then how we're hoping to apply that to Europe as well, and well beyond. So in the US, we are already focused on all types of financial accounts. So we do integrations with wealth management, with lending, with kind of all of the other different types of financial data that a consumer might have. I think that this concept of holistic open finance, considering the entire financial picture of a user, is just crucial to building any great financial product. If we're limited to only seeing how much you have in your checking account, but we ignore the fact that you have a big investment portfolio or a big loan, it means we can't actually give you good digital financial products. So again, open finance for us is a crucial term. We're going to hear a lot about this in the coming months and years. And then in terms of other types of data, very open to it, and we've actively considered other types of data. However, I think it's important to understand the mission of our company, which is our goal is to kind of make money easier for consumers, make money easier for everyone. Our goal is truly focused on enabling consumer financial services. So in as much consumer and small business financial services. So in as much as adding other data points, perhaps as we've done in the US with our payroll lending product, verifying the amount of payroll that a small business has, yeah, that's a great data point that we're going to pull in, but we're not going to go pull in a completely non-financial or non-financially related metric. So open to other data points. However, it all clusters around this central idea of financial services and enabling simpler, easier, more straightforward digital finance.
Ajit Barak has asked, and this is a broad question, but what does the Visa Plaid deal mean for the industry? We've got lots of entrepreneurs, lots of CEOs from across Europe watching. And obviously that deal was a vote of confidence. It was a vouching for the sector. What do you think it means for the industry?
I think it means lots and lots and lots of growth. The thesis for the deal is really a reinvestment in this concept of open banking, open finance, consumer first, or consumer enabled digital financial services. And frankly, when we first had a chat with Visa, I made it incredibly clear that we have no interest in doing anything other than the mission that we're focused on. And the only way that we'd be willing to engage in this conversation is if they were likewise committed to building the business and scaling the community in the same way that we were. And so the mantra for the entire transaction has been Visa accelerates Plaid. So Visa enables us to accelerate on our mission towards digitizing financial services, creating a fully digital kind of financial life for consumers, and enabling consumers and businesses to have access to the tools and services and the data that they need. Visa believes very deeply in the community of fintech that we've created so far, and importantly for the future of where it's going to go. And so what I'll say is, Plaid has built great products. I'm incredibly proud of what we've done. However, having access to greater resources means a lot more for the fintech community. And so I actually expect it to be a meaningful acceleration of our business. And I hope that everyone in fintech, when we look back a few years from now, we can say, man, that was a seminal moment, a vote of confidence, yes, but importantly, additional resources going into the community in a way that the community really needs.
We'll look forward to watching. Ramiro Martinez Pardo, this is a great question. You founded Plaid in 2012. He's asked, what fintech startup would you start today if you had a blank slate, or even if you had done Plaid, and what would you do next?
So to be quite honest, there's so much more for us to do at Plaid. And so it's actually hard for me to see beyond the things that I want to go do next at Plaid. We've really only scratched the surface in terms of thinking about the quality of financial products that should be out there, and thus the infrastructure that is needed. And so the way that, one of my favorite conversations to have with people in fintech is to say, hey, what are your blockers? What's your roadmap? What's going slow? How can we make it go twice or 3 times or 10 times as fast? And please give us that input, and then we'll go build those things. And so definitely something in infrastructure, definitely something focused on the broader community. Because just the energy around fintech has been so great over the past few years. But as I said before, I think we're really only just getting started. So something in kind of financial services infrastructure, taking some of this complexity, some of this kind of paper process that has existed for so long in financial services, turning that into digital methodologies, and then delivering that back to the community.
Fantastic. Last question from Ashling, who's asked, Plaid pivoted early on in its journey from a financial management app to its current form. Do you think we're going to see more fintechs having to pivot in this current environment because of coronavirus? And how do you rate that, our chances of pivoting at the moment?
It's a good question, and I'll just touch on. So our pivot was extremely early on. Before building Plaid, my co-founder and I built 6 digital financial services products, and we found that we just needed the infrastructure in order to get there. We may well see pivots, we may well see changes, and I suspect that in most cases pivots are very well warranted, and ideally they're focused on the right reasons of helping consumers or the constituents kind of solve the problems they need to solve. I would say for us, my experience in pivoting was really before we built and scaled a product. And so it was more just an identification of a bigger need. And in many senses, I hope that the entrepreneurs out there will remain nimble and be willing to make the necessary changes in order to kind of make the product that people really want.
Brilliant stuff. Zach, thank you so much for joining us. I think it's at 8:30 in the morning where you are, so really appreciate you getting up early and joining us. Thank you.
Yeah,
thank you.
Of course, Oliver, thank you so much for the time, and sorry for the wet hair. It is indeed early.
Good stuff.